What's going on, everybody? Welcome into today's video. I know I haven't posted in a minute, but I have been busy. I promise I'm not just lacking. I've been in Dublin in Ireland for the past week. I haven't really been trading too much. I think I took like 2 trades the whole week. Both were winners. One hit for like $9. I forgot what the other one hit for. I think a couple thousand. But yeah, so basically right now I'm just about to head out to the gym. I got the day done really early. Let's see, what time is it? As you can see, it is 10:59. I'm in Central Time, so market opens at 8:30, and we got finished at 8:36 today. So it was a 6-minute trading day. I made around, what, $3,100, something like that. I'll show you guys the trade I took here in a bit, but I'm on the way to the gym now, and I have my camera in my car, so I just thought I'd go ahead and kind of start the intro to the video. But yeah, so I'm about to head out to the gym, and then I'm gonna come back. I already posted my trade review to all the Inner Circle members today. And yeah, I'm gonna do a couple one-on-one calls with some students. And yeah, that's about all I have planned at the moment, other than, you know, putting out this video and all that kind of stuff. So I guess I'll see you guys on the way back from the gym. So I did just get back from the gym. I hit legs pretty freaking hard. So yeah, now the rest of my day is just gonna be one-on-one calls, and then I do have some content to make, some short form for the Instagram and the YouTube shorts. And then after that, I think I'm gonna go take a walk and then maybe go skate with some friends, and then talk about a new potential business idea that is not trading related with a couple people. So that should be pretty interesting, but it's time to get into today's video. So I'll see you on the other side. Alrighty guys, before I get into the actual strategy, kind of just wanted to show this for transparency purposes. I'm up 2,200 right here, and for some reason it does not connect Rhythmic accounts with TradeZella. So I usually use Trade for all my accounts, but I do have a couple on Rhythmic, so that will total this number up to around 3,100 on the day. As you can see, been really clean. I was on vacation last week, and as you can see, these were the trades that I was talking about earlier. So yeah, so just kind of want to show you guys that for transparency purposes, show you guys how I did today. Yeah, and then also real quick, I had somebody ask this in the last video. It says 10 total trades. That's just the accounts copy traded that it detects with TradeZella. I didn't take 10 trades, I just took 1. But yeah, 100% win rate. So just want to show you guys that. Now let's actually get into the video. Now, this is my AEM strategy. I no longer trade the PRR strategy really at all. And AEM stands for Algorithmic Expansion Model, and it's exactly what it sounds like. I know it might be, you know, big words, but it's just how price is going to expand in trend. But as you can see, we have a pretty obvious market maker sell model here. And now I'm going to look intraday. So I expect price to maybe want to deliver into these imbalances because in market maker sell models, you'll see that the market likes to kind of play out almost like gap fills sometimes. So if you have fair value gaps here, price will likely take out, you know, that, or take out like a form of internal range liquidity, like in this case, London low. That's very important. We'll get to that in a minute. And then it will reject and go higher. So yeah, so going into today, let's just go to the 5-minute time frame. I'm looking and see, okay, Asia sold off. All right, so we have an expansion move and a distribution move inside of Asia. Now I'm going to go and I'm going to look at London. All right, so I noticed that price right here, we have a false uptrend. This uptrend is simply to rebalance a bit of this expansion range, okay? Now, I noticed that we create buy-side liquidity, all right? So, I'm just gonna mark that out. And, oh, hold on, I didn't get it exactly. This is very important, I get it perfectly. So you see that this is also, I fast forward it, we are at 8:15 a.m. and you can see that the market didn't ever sweep this high. So we never swept buy-side liquidity on NASDAQ. But let's go over to the ES chart. So going over to ES, let's see right here, you can see on ES that the market swept out that high. Okay, so it's very important. You need to be looking out for that. You need to have NASDAQ on one screen, and you have S&P on the other, or ES. Okay, so as you can see, there is a crack in correlation. These assets are supposed to be correlated, but they're not. Okay, so this is what is called a bearish SMT. When you see SMT, it's at the highs. Okay, or sorry, a bearish SMT is at the highs, a bullish one is at the lows. So we have this swing high and we have this swing high. This is going to be our bearish SMT. So this counts as a liquidity sweep. All right, so you need an SMT or a liquidity sweep. That is the first thing you need. So let's just mark this out with SMT. Sorry, my camera's kind of in the way, so I'm kind of like dodge. All right, so we're going to mark that out. There we go. So that is automatically giving us a framework that we are likely to go bearish towards opening. We have London low right here, and this is the low of day at this point, I believe. Yeah, this is low of day. So we have everything telling us we're bearish so far, but we need to pay attention right here to this fair value gap. All right, let's actually up the time frame, and let's look at this fair value gap. So basically with my PRR strategy, you know to look for an SMT or a liquidity sweep and then an inversion. So we're still going to use that kind of framework here. So we're marking out a 15-minute, and we're using the 15-minute for directional bias here. So let's just mark this out, and let's see if we inverse the 15-minute. Okay, the 15-minute got closed below. So now my bias is like extremely bearish. I know we're going to go lower. But personally, I don't want to take a trade off the 15-minute time frame, given that like you're going to have a lot higher of a risk to reward. In this case, you actually didn't have that bad of a stop loss. I meant to say stop loss. You didn't have that bad of a stop loss, but still, yeah, you want to wait for a safer opportunity, which is where the AEM model comes in. So you don't enter here, but what you're going to do now, you see that we have an inversion, and you don't always need an inversion on like such a high time frame. This can be a 3-minute inversion, a 2-minute, a 1-minute, 5-minute. It doesn't matter, but just in this case, it was a 15-minute. Now we're going to scale down. Let's check the 15-minute out. Okay, so now we're looking at the 15-minute time frame. We notice that we have a fair value gap right here as well. So we're just going to basically fast forward this a little bit, and we want to see price react off of this zone. So we're going to just annotate this real quick. This is going to be IFVG. All right, we want to drag this out to the right. I always preach this. Drag out your inversions to the right. Seriously, this will make you so much money. So we're dragging our inversion out to the right, and we're going to use this as kind of a resistance level. So I know London low is my draw on liquidity. Why? Because we had a bearish SMT. My camera's kind of in the way. I'm going to move that. And why? Because we had a bearish SMT, and then we had an inversion on the 15-minute. That's very directional because it's like, you know, it's a higher time frame. It's going to be better aligned with bias. Okay. So we see that right now we're on the 5-minute. We want to see price basically trade to London low. So you could enter short if you're trading the PRR strategy right now based off the 15-minute inversion. But personally, I'm going to wait. So we're going to fast forward a bit. All right, now it's very important. Let's look at what price is doing. Price is sweeping out an internal low. If you were to take a trade off the 15-minute PRR, you would go break even here. All right, let's just mark that out. All right. Let me just get rid of my 4-hour candle real quick to clean up the screen. All right, and then hold on, I'm just gonna completely get rid of ES. We don't really need it anymore, just so you guys can see and my webcam doesn't get in the way. Now, we're basically going to sit here and we're gonna wait, all right? Let's look at what the market's doing. We're sweeping out internal liquidity, and then we're going to rebalance, okay? Because notice how we left fair value gaps behind, and I'm on the 5-minute right now. So I'm sure if we go to the 1-minute or the 3-minute, 2-minute, 1-minute, there's going to be more fair value gaps, a lot easier to see. So when we go here, let's just zoom up a little bit or speed this up. Okay. Now this is very important. What time was this at? This was at 9:05. Okay. What price is doing right now is it is basically, you notice how we had an inversion on the 15-minute. We hit an internal low, and now we're trading back, you know, into the IFVG. This doesn't mean my bias is invalidated. It's really funny because price is actually inversing to the upside now technically, but I'm not looking at that. That completely goes against my draw on liquidity, because even though like my draw on liquidity isn't this like stupid tiny internal low, my draw on liquidity is London low, the low of day. So we're going to just keep our IFVG here. Now we're looking for shorts. This is the AEM model. When you see price basically inverse a fair value gap and trade back into it, that's your key signature to enter a short, okay? So you could enter your short position when price trades back into the IFVG. That is a completely valid, that's a valid thing to do, all right? But there's a way you can have better confirmation. The better confirmation is going to be, hold on, I'm gonna make 2 of these. So this is going to be like your A-rated setup, okay? Now I'm gonna show you the A+. The A+ is this, all right? What time is it on the chart? right, it's 9:05, so we're near opening. We do want to watch out for a potential retracement into this fair value gap. Let's just speed this up. Okay. Notice how we left behind another fair value gap. Okay, I know there's kind of a lot of stuff going on the screen. Let's move it there. What we want to do, if we want an A+, is we want to look for a second inversion if possible. Okay. Bam. And there you have it. Notice how price inversed down here. So now what you're going to do, hold on, let me just rewind this back just to clean my screen up. We're going to go here, then we're going to go here. Sorry, it's kind of laggy. All right, now this is where you would enter. You have, let me just put this here. What you're looking at right here is you're looking at price inversing the 15-minute right here. And then price goes to sweep internal range liquidity. It trades back into the inversion on the 15-minute. It then creates a new inversion on the 5-minute. So the lower time frame is creating a new inversion. I know it might sound like a lot, but here's why this is so OP. If you get the A+, what you can do, all you have to do is literally you can take your stop loss, you can throw it at the swing high that trades into the inversion, or you can do it a little bit tighter of stop and you can throw it right over the inversion. It's a little bit more, riskier, but your risk to reward is going to be a lot greater. So it looks something like that, and then your target would be London low. Okay. Now, as you can see, price smacked out London low at opening. This is a trade we took when price inversed right here. So that is the AEM model. It's basically when you see, let me move that back. It's essentially when you see price create a PRR setup, which is a liquidity sweep or an SMT, and then you see an inversion, that's a valid setup. But when you see price trade back into the inversion, that gives you like literal top tick entries. If you took a trade right here, say you entered right here, your drawdown would have been 8 points. Your risk to reward would have been 2.46. Say you wanted to just put it at the fair value gap, it'd be a 4 risk to reward. Okay, so that's why it's so overpowered. And the thing is, if you took the PRR setup on the 15-minute, let me just show that one more time. If you took this SMT and inversion, if you went break even at the internal low like you're supposed to, you would have gotten stopped out for break even. Okay. Meanwhile, I'm over here taking the AEM strategy, and the thing's, I'm taking the safest trade possible, and it's running harder. And the reason why is because you're getting just extra confirmation. Notice how, I remember saying this when I first made the model, notice how every time there's an uptrend, it's not just going to always go up, it's going to have pullbacks. When you're doing it this way, you're algorithmically catching the pullbacks. When you see the SMT in price, you're automatically bearish. When you see the inversion on the higher time frame, you're bearish again. When you see price trade back into it, you're still bearish, but you could use extra confirmation. Then you see another inversion on the lower time frame. Everything's telling you it's bearish. That's like 5, I don't know how many said, maybe 4, 5, 6 confirmations to enter the trade. And the thing is, it's so safe because look at your stop loss. Your risk to reward is insane with it, and the win rate is just as crazy. I went on like how many days? A 20-something day win streak in what was last month? And was part of this month. I think it was May and April. A crazy win streak. So yeah, that is why this is the best strategy. I know it can be a little bit confusing, so I really want you guys to study this. And the thing is, if you guys have questions, go to the free Discord in the description and ask me any questions you have. Hit me up on Instagram at GSTrades. I will answer you guys' questions. So yeah, that is my AEM strategy that yielded a 90% win rate last time I backtested it. Took me on like a 25-something day win streak during May and April. And one thing I did want to mention real quick before the video ends, if you guys want to see me live trade this strategy every single day and catch crazy wins, just go to the link in the description and join the inner circle. It is going to be like the top or second link. I daily live trade in there every single day. There are weekly calls where we go over, like weekly classes, where we go over a specific strategy or concept, all of that kind of stuff. And there is literally over 30 class recordings saved. So you get to join and you get literally over 20 hours of information, bang, right there that you can just start automatically taking notes with. And you also get to join a super cool community full of people who are all dedicated towards the same thing, achieving financial freedom and making a shit ton of money and creating good habits and creating, good habits, not just in trading, but in their life. becoming better people, all of that. It's self-improvement and it's trading. But yeah, the inner circle is great for all types of traders, but especially if you are a struggling trader, whether it's, psychology, whether it's your strategy, anything, the inner circle is the place for you. This is an extremely supportive community, and I am always there. I'm always active in chat helping people out. So just wanted to mention that. The link is in the description, but I will see you guys in the next video. Hope you guys have a great rest of your day. Peace.